What's up everyone, it's Scotty with MoneyVest. So this is going to be your daily, weekly update on the Magnificent 7 stocks. We're going to run through the entire technical analysis on the large cap tech companies. As always, sit back, enjoy, grab a cup of coffee, tea, because these are videos that are going to be a little bit longer than usual. And I hope you all enjoy it, find it helpful. The only thing I'm asking in return is that you drop a like on this video and subscribe to the channel if you haven't already. I would really appreciate that. And also do check out the links down below if you're interested in joining our MoneyVest community. Of course, access to all the members only private videos, over 40 plus lectures and tutorials, Excel spreadsheets with fair values and intrinsic value with our entire watch list, our volatility spreadsheets, our S&P 500 valuations, things that I'm going to go over in this video, you can access at your own convenience. And of course, Discord access with over 20 plus channels. Trade alerts, trade ideas, everything's going to be included. Find out exactly what I'm buying and selling on a regular basis. And of course, lifetime access to all these courses. Links down below, and Instagram if you want to connect with me there. My handle is going to be CASWRP. I'd love to connect with you over there as well. So first things first, let's talk about the current read on the S&P 500's RSI. That's a relative strength index. And right now we are sitting at just a little bit under 70. So this number was obviously at over 72, 73 just a few days ago, and it has pulled back under 70. So kind of borderline overbought, and it's in the 88th percentile. We're back in the normal sort of territory right now. And the amount of times we have been over 60, or I would say over 70. So you can take a look at this. And this is going back as far as 95 years, right? So this is 22,000 observations for the S&P 500. And the number of days we spend over 70 are 10.27%. So again, 90% of the times we spend with the RSI below 70, and only 10.2% of the times we spend with the RSI that's a little bit over 70. So that just goes to show how overbought or overextended this market really is at the moment. This right here is going to be volatility, and we're just a little bit over 13. And this number has obviously gone from rare to now in normal, and we're in the 18th percentile as well. And if you take a look, the number of days that are below 10, it's only less than 1%, so 0.80. We're not there yet, but we are certainly obviously very muted and very, very low at the moment. So days under 10 is going to be only 68 of the 8,514 observations that we have calculated. This is going back as far as 35 years worth of data. This right here is going to be the current read on the Nasdaq stocks, percentage of Nasdaq stocks that are trading above their 200 simple moving average. So once again, we have rotated back down a little bit. So we're now back in the normal sort of territory, 66th percentile at 54%. So what this basically means is that 54% of these stocks in the Nasdaq are trading above their 200-day simple moving average. So majority of the market is trading above its 200-day simple moving average, which again does go to show that the markets are on a very nice uptrend, and the days above 50 are spent at 42% of the times, right? In other words, majority of the times the market actually does spend its time with majority of stocks trading below their 200-day simple moving averages. And this right here is going to be S&P 500 stocks trading above their 20 simple moving average. So 20 daily moving average is the actual perfect connotation, and that's going to be 76%. Again, majority of the market is trading above its 20-day moving average because of the momentum and the aggressive move to the upside that we have witnessed from S&P 500. So 78th percentile, and days above 70, you'll notice, is going to be only 1,300 observations, and that's 32% of the times from the market. Now this right here is the current valuation for S&P 500. So what you'll notice is 4,600 is where we are, and according to the estimates for 2023 between 220 and 225, the current valuation for the S&P sits at just under 21 to a little bit over 20.4. So these are the two numbers based on, of course, the different expectations for EPS, whether it's 220 or 225. But this is really where we are, a little bit over 20 times price earnings multiple on the S&P 500, which again is higher than its 15-year, 10-year averages, even 25-year averages, and slightly lower than its 5-year average. So more recently, though, on a 5-year basis, the average price earnings multiple has been 21. And we're actually very close to our 5-year average, right? So we're 20.93, 20.4, pretty much the average multiple. And earnings yield, so this is a reciprocal of the P multiple itself. So this is going to be at 4.9%, which again makes the market, equities more specifically, a little bit on a broader basis, slightly unfavorable considering the bond market, right? So treasuries and where they are, they're at a much higher level, especially when you consider the shorter end of the curve. We're looking at 3 months, 6 month, 1 year. They're sitting at well over 5%, 5.2. So the equities on a broader basis, S&P 500 as on an aggregate basis, certainly looks a little bit more unfavorable on a risk-adjusted basis at the moment. Now going over to this right here, S&P 500 stocks trading above their 20-day moving average. This is exactly the chart that I was referring to, but in a more grid style fashion and more data-driven analysis. But this right here is where we are at the moment, 76.34%. And every time we kind of hang up there for some time, you'll notice the markets eventually do see a bit of a pullback, and that's very normal because this is a good representation of how overbought or oversold the market currently is. And we are once again inside this red rectangle. Not saying that immediately that's going to result in us selling off and the market's pulling back. No, it just means that, okay, majority of stocks have moved back above their 20-day simple moving average. Yes, we can kind of hang up there for some time, but eventually we do see a bit of a pullback every single time. It's just, it's a given. It's just part of the nature, part of the market cycle that happens over and over again. Now this right here is going to be the S&P 500 stocks trading above their 50-day moving average, almost an identical chart to the one that we just looked at. In fact, this one is 82%. And once again, every single time it's inside this red rectangle, it can hang up there for some time. Again, over here several times, but eventually we do see a bit of a pullback, which is a very, very normal thing for the markets to see a bit of a pullback, some profit taking, considering after very, very strong rallies we have already witnessed. So this right here is the previous times when the markets obviously have pulled back from after hitting over 70, 80% of this indicator. So we can again hang up there for a little bit longer, just go sideways. Markets can continue to move up, but eventually we do know that there is going to be a bit of a pullback or some type of a dip coming. And I'm going to share my final thoughts towards the end of the video and what I expect in December and January. I'll go over that towards the end of the video, so definitely do stick around for that as well. This is going to be the, again, percentage of stocks trading above their 200-day simple moving average, another chart that we looked at earlier, and right now we're at 54%. Again, majority of the market's trading above their 200 SMA on the Nasdaq. This is certain levels that we have gotten up to before seeing a bit of a pullback over here a couple times. And once again, this has been a very strong rally back higher. So it's possible that we do have a little bit, maybe more room to the upside, slightly more room up to 65, 70%. So Nasdaq can continue to rally here, consolidate sideways, and then see a little bit of a pullback eventually is also a possibility. And finally, S&P 500 stocks trading above their 200 simple moving average. It's moved up very nicely. So this right here is the time when I was talking about how get your cash ready. This is the time to be buying. In my opinion, I was dollar cost averaging. The risk reward was very good. But now, of course, we've moved up very, very nicely. So we're coming up to this previous levels of resistance. Like I said, we still may have a little bit more room to the upside to coming up to this red rectangle, to this resistance area like we did in the past. So we're not there yet. So maybe there's more upside on a short-term basis, but eventually, of course, consolidation, then of course there is a possibility for a pullback eventually, which I do expect is going to happen in January of 2024, which I'll go over towards the end of the video. Now, this is going to be S&P 500. So what we have witnessed for the S&P, of course, is a very nice uptrend over here. But then, of course, since July, since the trouble trifecta, we talked about crude oil prices, we talked about yields, we talked about the dollar index, they all started pushing higher. We saw the markets trading inside this downtrending channel, so lower highs and lower lows, and eventually it broke out very, very nicely, gapped up even to an extent where it's now starting to kind of drift slowly and steadily higher, coming up to its resistance of 4,600. So this right here, very, very important level of resistance, same exact level where we got rejected at the beginning of July, which pretty much kickstarted this entire sell-off. And that's really where we are, with the RSI, of course, kind of hanging up there at an extreme level, overbought 69.70, with the price, of course, approaching that resistance at 4,600 as well. So that's where we are. Can the markets break out of this level and continue to move up? Absolutely. There's no doubt about it that that's a possibility. Or can the markets start to pull back and, of course, roll right back down to 4,500, or perhaps break down even further to 4,375? That's also a possibility. The only thing we're here to assess is the risk and the reward. I'm not here to make a prediction on what's going to happen, right? Because that's useless and nobody can do that accurately, at least not consistently, right? So yes, we're at a resistance. The marginal upside from here is not as great at the moment. So on the long side, the risk reward is not that favorable. And as a result, I'm not going to be trading this on the long side. There's a possibility for a 4,500 drop, possibility for 4,375. Those are certain levels that I'm watching, given how overbought the RSI MACD is, but we're here to analyze the risk and the reward. Same thing is, again, this is the S&P on a weekly basis. If you do end up breaking out of this 4,600 level, the next level is going to be this right here at 4,800. That's going to be the level to watch, kind of in line with pretty much the all-time high for the S&P. But the first level to break out of is going to be this 4,600 wall that we're coming back up to from our July high, which if I were to make a prediction, even though I don't like making predictions, if I were to make a predictions, I think these December seasonality could take us higher, considering there's been 6 consecutive weeks of green, 6 consecutive weeks of green, and December seasonality could break us out even further, and that next resistance is going to be at 4,800 for the S&P. Now talking about the Nasdaq, so Nasdaq here also has been on a very similar sort of trajectory where it's been kind of trading inside this downtrending channel, lower highs, lower lows, and now it's coming back up to this July high at 14,400. So we're back up to that resistance over here, and that's the level that we also got rejected at in July in the past, and 14,600 is going to be that next target beyond 14,400 that we're watching at the moment. And of course, if you do end up breaking out of both, next target pretty much is all-time high at 16,000 for the Nasdaq. So first level, first sign of real growth we're going to see is a potential breakout above these levels at 14,600. So that is going to be the level to watch going into next week. But 6 consecutive green weeks with an overbought RSI and MACD, I don't know about that. I mean, the risk reward is definitely not looking great, but markets can remain irrational longer than you can stay solvent. Something to keep in mind. Now, Apple here approaching its resistance and its all-time highs. So this right here is going to be the level to watch. It's going to be sitting roughly at 198, close to $200, I think. And we are pretty much at that level. Very nice breakout to the upside with some nice higher highs and higher lows, and a little bit of a bull flag breakout over here as well for Apple. And support level is going to stay put at 190 all the way down to $180 per share. So those are going to be few levels to watch. Of course, RSI MACD continues to kind of hang up there a little bit on the overbought levels, but it has done that in the past where Apple here, RSI very, very overbought for longer, and the price continues to charge higher in this sort of uptrend, higher highs and higher lows. So yes, it can stay up there for a very long time before starting to finally come down and roll over. So it's not a question of if, it's a question of when, but nobody has the exact answer to when that's going to happen. But right now, we're coming up to that resistance here. That's going to be sitting roughly at 196, 197 for Apple. Talking about Amazon here, that's going to be that next resistance. And you'll notice we have just been consolidating sideways for a really, really long time. So what we have witnessed is just a lot of consolidation sideways here. It's been weeks. Amazon's just been trading sideways in that range. It's going back and forth. So there's a big resistance at 147, 148. And RSI, I feel like there's a little bit of that negative divergence because RSI is not really going as high as it did before. And yet the price continues to kind of hang up there at pretty high levels. So support level is going to stay put at 135, 136. Previous resistance, a little bit of that support here. That's going to be the level to watch. Of course, all the way down to $121, much stronger support at those areas for Amazon. And right now, I feel like there's much broader consolidation that's happening for Amazon in between this range. This is the wider range between $147 and $121. So this is basically the $20, $30 range within which Amazon's been trading. Now, Tesla is on a very interesting sort of pattern overall because it's got this broader widening wedge where it continues to trade in because it got rejected here perfectly. So that there's definitely a resistance here at this lower high. And then, of course, started a much shorter downtrend in this lower high and lower low pattern. So zooming in, what we have witnessed for Tesla is a little bit of an uptrend here. So this right here is the overall uptrend. But then, of course, it's now trading inside this downtrend. So there's there was an uptrend. Now there's a little bit of a downtrend with lower highs and lower lows. You can see that we're getting rejected here constantly several times over and over. This right here is going to be that lower low. And we continue to kind of trade inside this channel that I just marked out earlier. Now, we've got a huge supply. We've got a very, very big resistance for Tesla in between these areas. So this right here inside this red rectangles, the one that I'm just marking out right now, between $280 and $320. So that's the range that there's a lot of supply for Tesla. It's not able to break out of these levels. In fact, Tesla's not traded above $300 in over a year. Support level is going to stay put down to low 200s. So inside this sort of green rectangle is going to be a very strong support. That's going to be low 200s. And within those two levels that I just marked, we are just trading inside this downtrending channel. So nothing is really kind of obviously I can't make a prediction here, but I do think that there's a possibility for Tesla to maybe see a little bit of a breakout and retest highs of 275, 280 to as much as $300 per share. But of course, a lot of that depends on the overall market, how Nasdaq performs and how interest rates end up being, what inflation numbers look like tomorrow. So of course, there's going to be a macro sort of a overview of the market and how individual stocks and especially growth stocks end up doing in that sort of environment. So still weak, still in the context of a downtrend. There's no confirmation yet. Big supply wall at 280 and 320, and support level is going to be in the low 200s. Now, Nvidia here has been consolidating sideways also. So it's really just been range bound for a very long time. And so what you'll notice is that Nvidia here is just trading sideways in between that range. So this right here is the overall consolidation pattern where we've got a resistance. A couple times we've gone rejected here once, twice. That's going to be sitting at $485 to $500, and a very strong support here in the low 400s, right? So lots of consolidation sideways for Nvidia right now. And this is going to be a much broader pattern for Nvidia, where of course it was in this uptrend, very, very nice recovery, and it's now just trading sideways in this range. It's got a little bit of a gap to fill here, which we'll find out eventually if it comes down to fill this gap between 310 and 350 or not. But it does seem like it's been consolidating sideways in that range, $500 big resistance, and could be argued as a little bit of a bull flag as well. We'll find out if you actually do get a breakout to the upside. Advanced Micro Devices, one of my favorite companies, and AMD here, it's just been consolidating sideways for the longest time. It was actually going down, lower highs and lower lows, and then a little bit of consolidation here where it was trading sideways in that range. A very strong breakout to the upside, a little bit of a pullback, and then of course, once again, retracing back up to that resistance, $130 per share. That's exactly where we are at the moment in terms of that resistance. So very strong resistance here for AMD, and support level is going to stay put at about $112 per share. For the company right now, we are a bit more on the overbought side for me, so I'm not really deploying any cash into AMD or buying any more shares, but I will be doing that maybe in the future once it comes down to a far more better technical level, reasonable valuations in the future. This right here is Meta Platforms, and Meta Platforms obviously has seen a very nice move to the upside 2023, one of the best performing stocks, and massive recovery. We do have a few gaps all the way down here that Meta obviously left on the way up. And for the most part, I feel like it's just been consolidating sideways for a long time in between that range with a resistance at $350, support level at $275. So that really is the range within which it's been trading at. However, there is a little bit of an uptrend that's also coming together really well. So this right here is going to be the uptrend where we are seeing Meta kind of trade inside this sort of channel. Very strong support, as we already know, inside this green rectangle. So previous resistance acting as a new support. And we've got that next target and resistance sitting at $350. That's in line with the previous level where we have gotten rejected in the past for Meta. So that's going to be that level to watch for this company. And again, this is the overall uptrend that we are seeing. Now, in terms of Netflix, Netflix, I feel like, has a much broader sort of overall consolidation pattern where it's just trading sideways here. But again, like I said, it has a little bit of a broader range. This right here was a shorter range, and this right here is a much bigger range within which it's been trading. And that's going to be between $350 and $485. Yes, it's a pretty wide range. This entire move to the upside was very strong, but then take a look at the other side, how overbought it basically got. And we did point out just some short trade ideas in my market updates, and we have started to see a little bit of that pattern starting to roll down. If you do get a breakdown below 450s, it's possible that Netflix ends up in the low 400s again. That's going to be in line with this previous support level where it's validated in the past. Now going over to Google, and Google here has also been consolidating sideways. So there's actually a lot of companies that are not really going anywhere but trading sideways. Nvidia is a prime example. Netflix is a very good example. Meta is a very good example. Google is another really good example where it's just been trading sideways. So it's been range bound. So resistance right over here at 144 with a support at 126 all the way down to $117. So these are actually very good swing trading opportunities. But at the end of the day, if you take a look at where we were months ago versus where we are now, it's flat. We're not really going anywhere, right? Because Nvidia, again, if you come back, Meta is at the same price as it was back in August, right? So it hasn't really moved much. Even I could argue going back as far as July. This right here is, again, Nvidia. Nvidia is at the same price almost as it was back in, again, July and August times. So it hasn't really gone anywhere. And Google also is at the same level or pricing as it was back in July and August. So we're pretty much flat for the most part. But of course, it has every one of these companies has had a very strong 2023 year up until August and September. And since then, we've just been trading sideways, except for Apple, that's now almost at an all-time high again. And of course, Microsoft trading already at an all-time high. So those obviously have done really, really well. This right here is, again, Google's overall uptrend. And now we're, of course, seeing a lot of consolidation sideways at the moment. This is going to be Microsoft. And finally, we arrive at Microsoft, where this right here is the overall uptrend of nice higher highs and higher lows. In fact, it was making these lower highs and lower lows before, but then of course that got switched up very, very well, and now higher highs and higher lows. And RSI MACD was overbought. It's now starting to show some signs of a bit of a pullback at the moment. So that's where we are with the overall technical update on the market. As I've already mentioned before, I think the fundamentals, so valuation wise, we're trading at the upper range of the overall averages. And technically, the risk reward is a little bit unfavorable on the long side. And eventually, in my opinion, there is going to be a bit of a pullback or a dip, which is going to give us the opportunity to maybe dollar cost average a little bit more, or start looking into the trades on the long side and move forward from there as well. In the meantime, what I'm doing is I'm basically selling calls. So I will be starting to sell some calls here very soon. And I will be looking at opportunities away from technology, especially big tech and Magnificent Seven stocks, because I feel like it's a very overcrowded trade right now. So we'll be sharing some other ideas in our community, in our Discord. So again, if you want to get access to all those things, link's going to be down below if you're interested in joining. Definitely do subscribe to the channel, and link to our Instagram and our Patreon and Discord is going to be down below. As always, happy investing. I'll see you all in the next video.